Hey everyone, Sterling here from Day Trading Forex Live, and we're going to do a quick video on stop placement. Now, stop placement is one of those things that is extremely critical. I think it's a point that most people don't give enough consideration to, and if they do give consideration to it, generally their stop is placed in what I term as the worst possible location. If you had to summarize where the majority place their stops, one of the most prescribed ways to trail stops or to place initial stops is going to be beyond the high. If you're short, most people say put your stop beyond the previous high. If you're going long, most people say put your stop beyond the previous low. This is something that spans time frames. It's not just something that scalpers do. It's not something day traders do. It's not something just swing traders or position traders to do. All of the different strategies or traders that trade those strategies employ that same technique, and it's one of the things that is taught universally. And I'm here to say right now that is probably the worst location that somebody could place their stops. Well, why is that? It goes to a very, very basic rule, and like everything else that we do here at Day Trading Forex Live, we're looking to track banking activity. So if you guys have been around the site for any length of time, and if you haven't, what I'd recommend first is understanding what manipulation or stop runs are. There's a link on this page that it breaks down a 3-part mini-series, and it goes through a lot of this basic information. But if you have been around the site, you understand stop runs, you understand manipulation, you understand that a lot of the time where these banks go to look for orders is beyond the last low or beyond the last high. And again, that's why it's so dangerous to put your stop there. It's also why Chad and I get emails every single week of traders saying, you know, I feel like I have a good strategy, I feel like I'm doing things right, but I'm getting stopped out frequently by a pip or two, and then only, immediately after that, seeing the market run in my direction. It's much like what we have here, and you can go back on any day and look at this all day long, but there's a reason why. I'll just bring this line down here. You have this very clear multiple test to this level. This is April 25th, 2013, by the way, on the pound dollar. So you have this very clear, well-established low through here. Why does the market, before starting the next push to the upside, why does it break beyond the lows before pushing back up? We'll scroll forward, and again, the same thing here. We'll draw another line here. You have the last established low on the 30th of April. Why, before starting the next push up, do they push it beyond the lows before driving it back up? Let's go out to a long-term chart just to show longer-term things. Same thing here. Daily chart. This is January 2nd, 2013. Before they started this massive trend to the downside, why do we see them create a huge stop run of the highs before driving the price down? Let's go out to the euro. Let's go back to really some historic price action. This goes back all the way to 2008. We'll zoom way out so you guys can see what I'm talking about. This is the huge drop in 2008. I know a lot of you guys probably weren't around during this time, but this is a huge historic drop, 3,700 pips. What started that entire move to the downside, though? Well, zooming all the way back in, what preceded it? Well, what preceded it was a 20-pip break of the previous highs over here, and that one false push beyond the high again was what preceded the entire drop to the downside. So what this should illustrate for you guys is that both short-term and long-term, this manipulation is what we see on a daily basis as well as on a longer-term basis, like what we showed on those longer-term charts, as well as like what we just showed here on the 30th of April, 25th of April, and pretty well every single day in the market you're going to see this. But these false pushes are what start the market move. And that is also not just the indication for how we enter the market, but it's also a huge indication for the stop loss. So why is it a huge indication for where we should put the stop loss? Well, if these are marking points for when the banks are about to trend the price, then that's where we want to get our stops beyond. Because if we've seen the stop run, remember it costs them money to move the market. So in the article that you're looking at, if you're viewing this video on the site, we describe general order flow. Now, a lot of times they use this general order flow at the beginning of the day to create the manipulation. So they're spending this money or processing these orders at the beginning of the day. And once they've already created the stop run, more often than not, like what we say in the room all the time, you're not going to see a stop run on a stop run. Therefore, after we've seen the false push like we have here, then that is the safe place to put your stop below that point. Or in the case of a short, if you've seen a stop run on some highs, as we showed on the pound, as we showed on the Euro daily chart, that's where you want to get your stop above. So the real key here, guys, to take away, and really the main point for putting your stops, there's really 2 points that hopefully you guys can take away. Number one, stop putting your stop below just random highs or random lows. If it happens to be the last high or the last low, unless that point was the stop run, do not put your stop beyond it. If you're doing that right now and you're wondering why you get stopped out by a few pips only to see the market turn your direction, well, that's the reason why. Number two, start putting your stop beyond stop runs only. Once you see manipulation moves like this, when they create a false push beyond key levels, key to previous turning points, once you see that manipulation, that then becomes the safest possible place on the chart to put your stop. Another side point you should gather from this is no matter what your trading strategy is, I don't care what it is, I don't care what time frame you traded on, you can see manipulation on any time scale, any time frame, any strategy. Because of that, you can use the stop loss location no matter what you use. No matter what trading strategy that is. So guys, I hope this video was really helpful. As always, Chad and I are here to help. We're happy to answer any emails you guys may have. You can email us at daytradingforexlive@gmail.com, or you can check out the site. There's a ton of information on the site as well that will detail this even further if you're not viewing this video on the site. And that is www.daytradingforexlive@gmail.com. All right, that's going to do it for this one. Till next time, guys, happy trading.